Yeah, so I know I gotta start off by chopping my neck once for postponing the class on Saturday, so we gotta make that up. Second for postponing the class for Sunday, and so that's another chop, and then not really for being late now, just 2 minutes late, right? And then yes, my IG is down, so I mean, it got taken down. It is what it is. Not gonna lie, I kind of like it. They just said that it was copyright that I'm pretending to be somebody else. And I'm like, well, if I'm pretending to be somebody else, who's the real Alex G then? You know? Like, what the fuck? So it's a fucking constant thing, bro, with Meta. Probably like a little hater or hacker that decided to do it, I guess. So it's okay, because I'm gonna get it back. I'm not even concerned at all. And the comeback post is going to be absolutely fire. But okay, let me finish pouring this shit. Whatever, I'll just put it here to the side. The comeback post is going to be fire because I did the John Jones shit. Let me show you guys. Bro, I'm telling you guys right now, John Jones is probably one of the coolest motherfuckers I've been in. Like, I've met a lot of people. I have met all different types of successful people. I just met this guy, and I feel like we had been boys for years. I don't know, it was fucking kind of weird. Like, so that's me and your boy John Jones in the Bugatti. So yeah, it was super cool. That motherfucker barely fit in that shit. Like he struggled to get into it, and we had a great conversation. We'll be uploaded on YouTube very, very, very soon. So cool. Have you guys seen the recordings? I'm just putting my electrolytes into this shit. Sick. And it's good. I feel like it's good that we kind of gave it a little bit of time because you guys, like, obviously we postponed things a little bit. Give you guys a little bit more time to rewatch everything and catch up to date. So I think it's a good thing, right? So, it sucks that, you don't have it back to back to back, but one day to just recatch everything, I think is totally fine. Okay, cool. Let me share my screen. Oh, chop my neck. Okay, fine. All right, ready? I don't want to do this right now, bro. But okay. One and two. Okay. Two times, two chops. There it is. I can literally break my neck and somebody will still be awake. Yeah, yeah, yeah. All right, cool. Let me bring this over here. There's some crypto that I'm looking at. Supposedly it's like a meme coin that's gonna have a nice push soon. I'm not invested into it right now. I literally just found out about it a couple hours ago from one of my friends that are pretty heavily into crypto. I am gonna be waiting for Solana to have a pullback. I am gonna be waiting for Dogecoin to have a pullback. I might just enter on Ethereum though. This is actually like one of the coins that or not one of the coins, but one of the cryptos. Well, I don't know what it's called, dude. I don't know what the fuck this shit is called. But one of my friends told me to put money into it. Or like if I was gonna put money into a low market cap coin, this would be it. I don't know anything about it, and I'm just gonna keep doing my research. Bro, look at my neck. All right. What broker am I using for crypto? You don't use a broker for crypto, you use exchanges. I haven't figured out an exchange just yet because I haven't invested into it. So I don't know. All right, cool. If you guys see my screen, type one. If not, type two. All right, amazing. All right, cool. Ladies and gentlemen, up to this point right now, um, up to this point right now, we are ready to start officially putting everything together with the set and forget strategy. So we are going to be analyzing this full Sunday swings with everything that we've learned in the last classes with our checklist. There's nothing that we're going to be doing different, and there's nothing that we're going to not be doing. So we're just going to take our trusty checklist and we're going to take it throughout the whole entire charts and figure out which one are the best trades that are going to make the most sense. Again, remember, this is exactly what we have done up to this point. We've understood what it is to find and identify a trend, how to correctly put an area of interest, how an EMA works, what a candlestick rejection is supposed to look like. Are we at the previous structure point? Do we have a wrong psychological level? Is there a pattern? And most importantly, do we have a shift in structure and engulfing pattern? So all we're gonna go do is try and find trades now that have this, that look like this when you put it all together. This is how everything looks separately. This is how it looks all together. So we know we're looking for this, and we're gonna look for markets to be just like this. If we can't find markets that are just like this, we're gonna find markets that are probably almost like this, that we can project that in the upcoming 48, 72 hours, it can create for us this. How do we project that? Well, we project that when a trade is almost at the area of interest or on the way. So if there's nothing at the area of interest, we find trades that are on the way, and we just simply wait. Cool. So let's start off with USD CAD. So shit, let me just do this. Is my mouse even on charge? Yeah, we're fine. All right. First things first. Bullish or bearish? Correct. Bullish. Higher high. Where is the higher low? Can it be this point right here? Well, first of all, there's not two candlesticks, so the answer is already no. And if even you want to count if there's two candlesticks or not, you go left, you put a line at this body right here, and you see body structure on that structure point right there. No, 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 no. So that is not a higher low. This is the structure point right here that gets all of these bodies. 1, 2, and 3. And if you notice, the higher low is not there. So that is not a higher low. Easy. So we keep it coming down. Boom. This is indeed the higher low on the weekly time frame. So right now we are technically bullish on the weekly. Cool. Daily. Are we bullish or are we bearish? Bullish or bearish? Very easy. Bullish. Higher high and higher low. Believe we've already done this. We've already identified that this is not the higher low. We've already shown it in multiple different examples. This is the higher low. Cool. 2 time frames in sync. Phenomenal. 4 hour. Are we bullish or are we bearish? Higher low, higher high, higher low, higher high, lower low, lower high, lower low. Get this out of here. This is the lower high. This is the lower low. We have not body candlestick closed under this, so this is still technically bearish. Cool. 4 hour time frame is bearish. Do we have 2 time frames in sync in order to be interested in taking this trade? Fuck yeah. So this is the trade now where we move on to the next point, which is going to be resetting back to the weekly time frame. Once we reset back to the weekly time frame, we will then begin on the next. Are we at an area of interest? Well, I don't know. Let's figure it the fuck out. So weekly time frame, if this is the weekly higher high, and this is the weekly higher low, we have to look for an area of interest in between this move. Obviously, price is here right now, so we have to start working from here down. We can't put an area of interest up here because price already broke through it. So we start going down, boom. It's at this point right here. Is there structure here? There's only barely whatever the fuck you want to call that. You want to keep going a little bit more left? Sure, you can. You're at your 4-year mark. Can you go a little bit more left? It is a little far indeed, but you could do something like this. You have one structure point, two structure points, and that's about it. Maybe you can get 3 if you were to squeeze this one right here. So that could be an area of interest, but you have a lot of far structure points, and do you really want to do that? Probably not. What you'd probably want to do, which makes a lot more sense, is using the most relevant 3 structure points right here. Resistance, resistance, resistance. Does not make sense to make one big zone like this. But Alex, here you get these points and these points. And it's like, yeah, like you could, and you can, like, there's no wrong in that. Like, you can do that, right? Let me make that extremely clear. I'm not here to say that you can't do that. But do you want to do that? Does that make, like, is that a pro? Is that a logical thing to do? Like, do you want to, like, it's either black or white. Don't try and make a gray where there's an in between. It's either really good or not. Don't try and make a not so good area combined with a really good area. Just make it one big area so you have all of it. No. This is either a really good area or it's not. That's it. It's not, then don't make it what it's not. And don't join it with what is really good. Something that's really good, don't bring it into the mix with something that's not good. Because then the shit that's really good is going to turn like shit because it's not really good. So only leave the good good and leave the bad bad. Don't try and put them in between. So if this is a valid area of interest, this is a valid area of interest. Don't try and make an unvalid area of interest a valid area of interest by just adding more shit to it. No, either it is or it isn't. Period. There's no in between. So this would be the next area of interest for me. You don't even have to go that far all the way over there. Cool. Weekly area of interest number 1. Keep it coming down with this higher high, this higher low. Boom. We hit this one structure point. You kind of do something like this. It is a pretty big zone. 1, 2, 3. Sure. What if you just get these points right here? So here you have 1, 2. What if you bring it down here? Then it's too big. I mean, I guess you could get this right here. This is about 60 pips. So that's like the max a zone should be. And I personally don't want to have a zone that big, but we can have it just for examples purposes, right? So let's just have weekly area of interest number 2. And why don't I like zones that big? Because they are not as respected as the tighter zones. You always want to be very, very, very black and white with that. Keep it going, keep it going. Boom. We got this one structure point here. And this structure point here. 1, 2, 3, 4. Looks whatever. We turn it around. 1, 2, scoot it up a little bit. 3, 4, 5. And I like that a lot better. So this right here is indeed another area of interest on the weekly. Weekly area of interest number 3. So for the weekly, we want the price to pull back, and I'm gonna start doing this a little bit faster, right? Like I'm not gonna do them all at this speed because we'll literally be here for 4 hours and there's no fucking point. So we are waiting for the weekly to pull back to weekly area of interest 1 to then have the push, or weekly area of interest to then have the push, or weekly area of interest number 3 to then have the push. That's what we're waiting on for the weekly. So right now, are we at a 1, 2, or 3? 1, 2, or 3? You should already know, because if we are at a 1, we are at a high. If we're at a 2, we're on the way. And if we're at a 3, we're at the area that we're actually interested in buying. Because right now, we're not at the area that we're interested in buying because this is where it is. And we're not at the high because we've already started to have a little bit of a pullback. So that means that we're on the way. So right now, you know exactly where the market is on the weekly time frame. You know that you're not ready to buy on the weekly, and you know that you're not at the highest point. You know that you're waiting for the weekly to get to one of these 2 points. So you know exactly what you're waiting for on the weekly time frame. Cool. Now we move on to the next time frame, which is going to be the daily time frame. Here, daily time frame. So this is where things can start getting a little confusing, right? If you don't have your charts very clean, you want to make sure you have your shit so clean and clear, like your lines are all lined up, the colors are bright, like not super bright, they're very subtle, because you don't want to get mixed up with a bunch of different shit. So this higher low, I don't need it for the weekly anymore. This higher high, I don't need it for the weekly anymore. You guys do. So what you guys should do is you guys should make this line invisible on the daily time frame. Since it's the weekly area, don't make it visible on the hour or the daily. If you see right here, don't make it visible on the hour or the daily. So now it's gone when you go to the daily, and the 4 hours doesn't fuck up your chart. But when you go to the daily, when you go to the weekly, it's still there. Weekly higher high, weekly higher low is still there. When you go down to the daily, it's not there, so it doesn't fuck up and have your chart with a bunch of lines. And you don't have to delete it. Because if you delete it, when you go back here, you might forget, and it just might be all over the place. No. Keep whatever's on the weekly, keep whatever's on the daily. And you can do the same thing with these areas of interest. If we're super far away from this area, dude, literally just get rid of it on the daily and the 4 hour time frame. So when you go down to the daily, boom, it's like not even there. You're not even distracted by this extra zone that's down here. So these are all little tricks and things that you will learn over time, and you'll see me do them, and you'll pretty much catch on to them, or you'll catch on to them very, very, very quickly. So we know that this is the daily higher low. We know that this is the daily higher high. We go into here, boom, start working our way down. Obviously, we are only at this area right here. We can't put an area of interest to an area that we've already broken through. So boom, we have this area. Here we have 1 structure point, 2 structure point. If we keep going left, do we have anything? We just have some wicks here. We keep going left. And we have like the bottom of this body right here, and then we also have like kind of this shit right here, which is very ugly. If we go this way, it is at kind of like the bottom of this area here. So for this to be a valid area of interest, I would have to do something like this. And that would make it valid. It's not the cleanest because I would have to go very far back to find more structure points that are respected at this point so it can actually be valid. So you never want to do that. You never want to have to force to go 7 years back to just get more touches. You want to have the touches the most relevant possible so they're most respected possible. Can you still do it? Sure. But it's not the most ideal. Best example that I can do with this. Let's say you want to go surf a wave. You don't want to use an old board. You want to use a new board. You want to use the most updated and sleek board that you can possibly find. Those old boards, they did great in their times, but the waves that are now active nowadays are a lot stronger than the old ones. So you want to make sure you use a new board, not an old one. Perfect analogy, really quick, easy, and simple. So you want to make sure that you are in the most recent and updated version of the market, not super old. You can still do it. You can still surf with an old zone. You can still surf with an old board, but it'll never be the same like surfing with a new one. New things are always better. So same thing here. Cool. So we're at this area. Wow. So we're at the area. Jesus, where did this shit go? Cool. So the daily time frame seems like we are at this area. So weekly time frame, we know we're a little far from the area of interest. The daily time frame, we are at this area of interest that we could consider, right? I think we can all agree that we are at this area of interest. This is the area of interest. We're definitely at it, or we have rejected the area of interest. So we would go into here and we would go start with the first one. Cool. Daily rejected area of interest. Cool. What's next? Daily, are we touching the EMA? Are we touching the EMA? This is what the EMA is. This is where price is. Are we touching? No, we are not touching the EMA, so that will not go. Let me just bring all this right here. So we would not have touching the EMA. Do we have any candlestick rejection? Well, if we bring this little confluence up to here, well, what is that? Is that a doji? Is that a shooting star? Is that a wick? Is that a rejection from an area of interest? Well, I think the fuck so. So, indeed, we do have a candlestick rejection because we are clearly rejecting the EMA. So, we're going to go into here, add our candlestick rejection, daily doji. Number 3. Do we have a rejection from a previous structure point? Well, let's bring it. Is this a previous structure point? Well, I don't know. Let's find out. This is the head of the snake. This is the tail of the snake right here, right? This point, or not the tail, the whatever, the other point of the snake. So we understand that we broke through this area here, that this is not the higher low. This is not turn 1 or turn 2, that we just went right through this. So this right here is turn 1, and then this over here would be turn 2. We've already described that this is not the higher low or turn 2 because there is no 3 touches at this area. It's not 2 candlesticks. Go watch the recording. But even then, for this example's purposes, we could still count this as turn 1 and turn 2, or count this as turn 1 and turn 2. They're both at the same motherfucking spot. So, which doesn't matter. You don't have to break your head on it to perfect it. What matters is that to get a rejection from the previous structure point, we are here. We are clearly at the previous structure point right now, or we have rejected the previous structure point. So cool. We have a rejection from a previous structure point. Then we will go to add it here. Cool. Rejection from previous structure point. Do we have a round psychological level? Drop the line in here, put the coordinates. What do we have? 139.5. Boom. 139,500. So we have a round psych level. And then we go to confluence number 5. Do we have any pattern? Well, we do have a clear break and retest because we have broken the area and we're now retesting it along with the previous structure, area of interest, round psychological level, blah, 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 blah. So we have a break and retest. Cool. Everything so far that we have described is something that we've broken down and we should very clearly understand. So right now we understand that we're taking this trade based off of a daily area of interest because we're at a daily area of interest. If we go look for all of these confluences on now the weekly, which we could, but since we're not at an area of interest, what, like none of this is even gonna be there. But just to refresh, we checked for all these confluences on the daily. Let's check for all of them on the weekly. So we have all these confirmations on a daily time frame, which is where our area of interest is. Now on the weekly time frame, are we at an area of interest or are we rejecting one? No. Are we touching or rejecting the EMA? This is where the EMA is. This is where price is. So the answer is no, we're not touching or rejecting the EMA. Do we have a candlestick rejection on the weekly time frame? Not really. Do we have a rejection from a previous structure point? Not really. Do we have around psychological level? It's the same thing. And is there any massive pattern on the weekly time frame? No. So we have no confluences that we could add on the weekly time frame. We only have confluences on the daily. Sometimes you could have confluences on the weekly time frame. You could potentially have a rejection from the EMA, and you could have a candlestick rejection. Maybe not this, maybe not this, and you might have a massive head and shoulders time, a big head and shoulders, for example. So yeah, you could still not be at the weekly area of interest, but price could still be creating some type of rejection to confirm to you that it is indeed following the daily and the 4 hour time frame. Cool. So now that we understand that we maxed out everything on the daily and the weekly, we're left with no choice but then to go now to the 4 hour checklist. So when we go down to the 4 hour checklist, we are then going to find shit. I'm like fighting with this shit. We're then going to find ourselves with the following confluence. The same thing. We don't want to see this. I'm not going to take it off just so it's very clear where it is, right? So the 4 hour checklist is going to be, are we touching or rejecting the EMA? Well, let's go here. We are touching and rejecting the EMA, but we are under it. You don't want to use that as a confluence. You want to use that as a sell. If you were to be basing a trade off of that, which we will never, but you want to add it when it's on top, when price is on top of the EMA, like how it is here, or how it's rejecting it here, or when it's rejecting it, like whatever. It's not like that. So we cannot use this, even though it's touching it, it's touching it as resistance. We're buying. We need it to be touching it as support to go to the upside, not as resistance. So this EMA will not count. Do we have a candlestick rejection? Well, right now we do have some dojis on the 4 hour. We do have some massive pin bars. We do have some morning star formation, some doji rejections. I would say, fuck yeah, we do have some candlestick rejections. So we have on the 4 hour, that's confluence number 6, candlestick rejections. Then do we have a previous structure point rejection? Well, if this is the lower high and this is the lower low, this would not have a previous structure point. You can only have a previous structure point when we are in the trend that we are trading with. We could have a previous structure point. This would be the head of the snake. This would be the other one. So this would be turn number 1. This would be turn number 2. That is the previous structure point. And technically, we do have a rejection from a previous structure point. But to sell, not that buy, you want to have the previous structure point at a buy, at a higher low. Like say that this was the lower high and this was the lower low. This would then turn into the higher high. This would turn into the higher low. We have turn 1, turn 2. Then this would be the previous structure point. Then here's would be where we're interested to buy. So if this were to be bullish, yeah, then we would have a previous structure point, but it's not. We're bearish. So we don't have a rejection from the previous structure point. Do we have a pattern going on here? Some could argue that we have a inverted head and shoulders. Maybe we have something like this and then something like this. But I don't know. To me, it's a little ugly. I want to have something that's a bit cleaner, right? I can't really draw the head and shoulders here. It's not, and also it's not completed. The head and shoulders isn't really completed. There's another one kind of like right here. Again, it's very ugly. It looks like, I don't even know who it looks like because this shit is just too ugly, honestly. Like I want my head and shoulders to be a lot cleaner, Something that, like my girl, I don't know. Did you guys see like my girl? I put my girl on my YouTube channel. I don't even know if I want to like distract people, but that shit was hilarious, dude. Like that shit was so like who saw my girl on the YouTube video? I saw her. Okay, sick, sick. Yeah, if you guys haven't seen my girl, go to my YouTube channel and yeah, I put her there. You guys will see her. So yeah, since the 4 hour is bearish, you can't add confluences because we're fucking buying. So you can't add confluences to sell if we're buying. It makes no sense. It's like if you want to have like it's like if you want to buy a pair of, like you want to buy a house and you're adding up reasons to not buy the house rather than to buy the house. You want to add up reasons on why it's a great investment, why it's not a great investment. Cool. So we don't have a pattern. And that leaves us pretty much done with the 4 hour checklist. Nothing else that we can have on the 4 hour checklist, which is pretty cool. Now we are ready for the next point, which is going to be the entries. Dun, dun, dun. Which entries is just a shift the structure, 15, 30 minute, 1 hour, 2 hour, whichever one looks cleaner. And then we will be interested in executing the trade. Cool. So we understand that this is the 4 hour lower low. Let me just take this off. Take this off. So this was the low hour, lower high, lower low. We body closed under, lower low. Now this is the lower high. And technically for us to buy on the shift of structure of the 2 hour, we would have to wait for price to break above this. Price has yet to break above this, so we can decide if we want for that to happen. Now let's go. So this is the lower high we have to break. So we put here 2 hour, make these red. So it's very clear what we are waiting for. We can then go down to the 1 hour and we find that lower high on the 1 hour. So this was the lower high on the 1 hour. Dude, this just becomes so easy. Like the more I do it, bro, I'm like, bro, this is just so fucking easy, man. Lower high on the 1 hour and then lower low on the 1 hour right here. Then we body close under 1 hour lower low and then 1 hour lower high. We shifted. This becomes the 1 hour lower high right here at this point. There's no higher low here, so this becomes a higher low. Boom, body closed above. This is now the higher high. We follow the snake trick. Boom, this is now the higher low right here. So technically on the 1 hour, we are bullish because this is the higher high and this is the higher low. So we should be good to enter the trade off of the 1 hour. We just need our entry confirmation. Cool. Let's see if the 30 minutes and the 15 minute can say the same thing. So we know that this is the 1 hour higher low, 1 hour higher high. 30-minute time frame. Are we bullish or are we bearish? So we can start off from like right here. So this could be the higher high. And again, you guys should not be starting as quick as I am. You got to like put in the work and like go from all the way up here. You would have to start off from this lower high, and then you would have to start and work through all this structure. For me, I already know that we're ready at this point, just because if this is the lower high, this is the lower low, this becomes a new lower low, this is the lower high, this is a new high. You just get it over time, right? So this is the 30 minutes. Higher high. Then this will become the higher 30 minutes higher low. So the 30-minute indeed has shifted as well. And we are yet to break above or under this 30-minute higher high, higher low. 15-minute, same shit, higher low, and this is the higher high on the 15 minutes. So technically we have officially had the shift of structure how we have been needing to enter the trade. Now, if we had the shift of structure on the 30-minute time frame, do we have an engulfing? Technically, we do. We have an engulfing pretty much anywhere here. 30-minute time frame, we had the shift to structure. So when this was bearish, we had the bullish engulfing right here. So we could have, so when this was bearish, right? This was the, so if I do it like this was the lower high and this was the lower low, right? We're waiting for the shift to structure. And as soon as we shift the structure like that, we can enter the trade there or wait for the engulfing retracement. And boom, we can enter on that engulfing retracement right there, or the next bigger one that happened, which is basically somewhere right here. And then boom, we can enter the trade basically right there, as well as with this engulfing. So we had the shift of structure, and then boom, we have the engulfing. So you could have technically entered this trade right here, 10, 20 pip stop. So this is the lowest point right here. This is the lowest point. You would then have at 10 pips, you would have then a 45 pip stop loss. And then if you're buying at a daily area of interest, your take profit has to be at the next structure point. So your daily take profit would be right here. So you have your stop loss at the bottom of that daily wick, and your take profit is at then the next daily structure point for a great risk to reward of a 1 to 2.5. Perfect textbook trade, everything good to go. There's just one con about this trade, ladies and gentlemen. Well, a couple different cons. First con is this happened late into Friday. So you cannot take a trade on a Friday. Who the fuck does that? It's like wanting to go to get food at Chipotle 30 minutes before they close. It's like, brother, you're getting the bottom of the barrel. You're getting the worst chicken. You're getting the worst right. You're getting the crusty beans. Like, you don't want that. You really don't want to do that. You want to get the fresh shit, brand new, straight out the fucking kitchen. You get that on Sunday night, Monday morning, whatever. So this trade happened on Friday afternoon. So what happens on Friday afternoon? It could have that move, but then it really won't happen because there's just no more volume. The market closes and then it basically dies. This is what happens to it. Now, when the market opens, this is basically just gonna fucking go like that. So art, it can obviously just go like this and then make it to the weekly area of interest. Remember, everything we've done up to this point right now is realize that this trade is now ready to basically execute. You're going to execute this trade right here, and you have followed the plan. Here you have a shift of structure on the 15 minutes, 30 minutes, 1 hour, and we haven't had it on the 2 hour. And then for accomplice number 8, we have the engulfing on the 30 minutes and the 1 hour as well. So we have the engulfing, we have the shift of structure. This trade is basically ready to enter, right? So you would enter this trade not as soon as the market opens because the fees are going to absolutely violate you. You would have to take the trade probably a couple hours after market open. So like 5-6 hours after, because truthfully, guys, there's no volume as soon as the market opens. And there's other little tricks that I'm going to teach you why you don't want to trade, why you don't want to take trades when the market opens. And I'm going to teach that to you when we're done with Sunday swings, because this one pair alone has taken me damn near 30 minutes and I cannot have this for every pair. So I'm going to teach you this little trick later. So basically right now, technically, this trade is ready to go. Promise you I did not pre-plan this. This is just the same pair we left off on Sunday on the last, on Friday on the last call that we got on. It's just how it goes sometimes. The first pair that we analyze could be ready to go. So we add all this up. We do have 20% here, 30. I mean, I'm just going to draw it out for like being a little too advanced with it. Right here, 10%. So here we have 20, 30, 40, 50, 55, 65, 75, 85, 95. This is technically a B plus setup. B plus setup, which is fantastic. I'm telling you, this is not a bad trade. This is a great trade. I'll take this trade all day. I'm like 90% sure I'm going to take this trade as soon as market opens. Not as soon as market opens. I have to wait for my extra confirmation, which I'll explain that in tomorrow's call. But yes, this trade is basically ready to go. Now, you gotta realize there is a chance of this trade losing. Why? If it has everything on the checklist. Well, no, it does not have everything on the checklist. If you notice, we could still have a retracement to the weekly area of interest. We could still make it to this weekly area of interest down here, which is the area of interest number 1 for the weekly. And then once we make it here, then we can have a great trade to then the upside. So that's the only thing that's like the only con about this trade. That this trade could still hit stop loss and still be very much bullish and still be on the way. Basically, this trade that we're taking right now is when I analyze the trades to you guys, this is basically the trade that we're taking right here. We're taking a trade in the middle of the move. This is like the full higher low where you would want the weekly to retrace, but the daily time frame is doing this. Let me just copy this right here. This is what the daily time frame looks like. So if you notice, the daily time frame is at an area of interest. And this is what the weekly area of interest looks like here. But we're taking a trade at the daily area of interest, which is right here. So this daily area of interest is right here on the weekly time frame. That's how it looks like. So it's not a bad trade. This trade is fucking great. Like I've made a lot of money on these type of trades. I'm just letting you know what, like you know exactly what you're getting into. You're getting into a trade that is not at the weekly area of interest, and it does have the opportunity to make it there. And it does have the opportunity to completely blow up from here as well. But you know exactly where the market is. The market is on the way to the weekly area of interest, and the market is at a daily area of interest. Now you can do one or two things. You execute this one, or you wait for this one. Either or are right. Executing here is right because it follows the trading plan. And waiting for the trade here is right because it is the stronger trade. So you do whatever your risk tolerance is okay with doing. There's no right or wrong answer at this point. Whatever you want to do is whatever you want to do. You can risk a smaller percentage here to be more conservative. If you make the money, great. And if you lose it, you just wait and then you take it here. Or you wait, you missed it, and the trade is gone, and now you have to just find another one. There's no right or wrong answer at this point. You're following the trading plan by doing both. If you take the buy here, you're executing a great trade that has a great opportunity of going to the upside. But if you wait for it to get here, you're also following the trading plan because you're waiting to have the most amount of confirmation you possibly can have to enter this trade. If this makes sense, say yes or say no. Everything, the analysis that we just did, everything. Tell me, right? Tell me that for all you beginners or intermediates or whatever, when you first started the boot camp, that in just 3 weeks, this shit would be so clear. By the way, this is the results right here. You guys can see that it is 98 and then the 2% like always. Jokey, I already answered your fucking question. The 4 hours bearish, no, we can't add any confluence because the 4 hour is like we could add the confirmations on it, but no, we don't do that. And then also, this is not a super valid daily area of interest. So these are other things that you got to take into consideration. Like, I mean, it could be valid if you go more left and you get more touches, but you got to just realize the type of, like, at the end of the day, you know exactly what you're getting into. If we're at an all-time high, all-time low, how do we find areas of interest? You don't. What if we enter the trade now and increase the stop loss to the weekly area of interest? Sure, you could do that if you wanted to. But now you got to have a motherfucking massive take profit. It just doesn't make sense for you to do that. Take the trade. If you lose, you move on and you enter another one. Can you show the process like the broker and all that? I already did, dude. Guys, please stop spamming. I make sure I just when I see like the same question 5 times, I just go to the bottom and then I just skip other people. I'm a farmer. I would never expect for this to make some sense. So I take all the notes I possibly can. Thank you. Hey man, Orlando, I want to have some chickens in my backyard, man. What do you recommend? What's your suggestion? Bro, you make this shit look so easy. This takes time. This takes time. All right, cool. Are we going through Sunday swings? Motherfucker, that's exactly what we're doing, man. Just the first pair just made sense. Fuck it, I'm gonna quit my job now. No. Ch. Not yet, not yet. So for this, we're just gonna wait. So this is our trading plan for this one. Cool. Next one. We're gonna do a little speed one on these now, right? And this is realistically how I always do it. Weekly time frame on this chart right here. All right, cool. Just want to make sure. Cool. Are we bullish or are we bearish? Bullish or bearish? Lower low, lower high, lower low, higher high, higher low, higher high, lower low. Bearish in the weekly. Daily, are we bullish or are we bearish? Lower high, lower low, lower high, lower up, lower low, higher, higher low, da, da, da. Bearish, lower low, lower high. 4 hour, bearish. We got 3 time frames in sync. Weekly. Let's take this off. Let's take this off. Weekly. Lower high and lower low. This is the body. This is the body. The fuck are these little lines here? Bodies and bodies. Start working our way up. Boom, 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 boom. Boom. Got one tap right here. Kind of squeezes down a little bit. We kind of make right here. 1, 2, 3, 4. How big is the zone? 90. Jesus. We got to make this shit tighter. We can squeeze it up a little bit. And here we have 1, 2, 3. 30 pips. Now we're talking. Now we're talking. Or can we do something like this? Because I do want to get this structure point right here. Oh wait, we could do this. Because here we have 1, 2, and then 3. 40 pips. Cool, we got it. I want to get this right here because what is this, ladies and gentlemen? The previous structure point. Head of the snake. Boom, the lower high. Turn 1. Wait, turn 1 and then turn 2. Previous structure point. And do it again. This right here is turn 1 and turn 2, previous structure point. So if price pulls back into this area of interest, what does that mean that we're going to have? We're going to have a retest of the area of interest, that's 1, retest of the EMA, that's 2, and retest of the previous structure point, that's 3. This is a motherfucking money spot. So I want to make sure that I can have my area of interest with as much touches as I possibly can. Cool. Weekly area of interest zone number 1. This is the lower high, this is lower low. We keep going up, boom, boom, boom. We got this point right here, structure point 1. This shit is just ugly as hell. Nothing else here, only one weekly area of interest. And again, this is not how I do it. I do shit a lot faster than this. I'm just doing one more a little bit faster. And then the next one, we're going to actually do it at the real speed on how I actually do it. Lower low, lower high. Basically, this is the lower high, this is the lower low. We start working our way up. Boom, we have first structure point here. We could look a little bit more left. Look a little bit more left. But there's a little fugly around here. Fugly. I said that word in forever. Another structure point here. Nothing. Boom. We were okay. Cool. We got right here. Support, support, support. Da, 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 da. Resistance. Cool. Now here we have a weekly and a daily area of interest. Support, 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 support. Resistance also on the daily. Cool. Weekly and daily area of interest. That's all we need. Now, we start applying the confluences on this trade. Where the hell are they? Where did I even bring them? Could we start applying the confluences on this trade? We already have a confirmation that we have the weekly and the daily bearish. And we have the 4-hour bearish. Dude, can we start applying the confluences on this trade? Yes or no? Let me know in the polls right here. Yes or no? Oh, oh, so many chop necks around the world tonight. So many chop necks right now. Get ready to chop your fucking neck so hard. Get ready. I'm gonna call John Jones to chop your motherfucking neck. Bro, John Jones is now my friend. Like I genuinely feel like I could call him right now and be like, yo, just talk to me on it, you know? Bro, it's crazy. So you got two options. Either you chop the fuck out your neck, or I'm calling John Jones right now and I'm gonna get him to chop the neck for you. So you pick. How in the fuck is this a 50-50 poll? I am absolutely disgusted. I feel like a teacher when half the class fails. I asked you, is this ready to apply all the confluences? The only way we can start applying all the confluences is if we're at a fucking area of interest. Are we at an area of interest? No, we are not at an area of interest. We are at a lower low. We're not even on the way. We are at a lower low. The 4 hour, if anything, is on the way, but we are not at the area of interest. Just because we rejected it one time with a fucking bullshit wick doesn't mean that we can't come back and do it again. We cannot start applying the area of it. We cannot start applying the confluence trades until we're not at the area of interest. Yes, we might have touched it once, but for this new trade that we're looking to take, we need a daily retracement into this area. We need that lower high, like I've been saying this whole entire time. Like I cannot believe you guys are 50% of you guys are saying that this trade right here, that's a lower low and it's a lower high, it's ready to apply the confluences. Dude, we haven't even made it back into the area of interest. What are you saying? Chop your neck. Dude, just chop your neck. Very disappointed. So the answer is no. We cannot start applying the confluences to this trade because we are not at the lower high. Did I say anything that confused half of you guys on that? Like, what went wrong here? I'm totally terrified. No, I didn't say anything wrong. I just forgot number one. How the fuck do you forget the number one? The wick confused me. Don't let the wick confuse you. I just rushed it. Why are you rushing, brother? See, this is why. Well, I answered correctly, bro. Well, I don't know. I don't know. I don't know who did it. I'm just talking to the ones who did it. So, what was I gonna read here? This is that you were in a rush. This is why we do the analysis on a Sunday. Because even if you wanted to execute this trade right now, you can't. It's like if you were a fat kid outside of a donut shop. Like you could be as hungry as you want, but if the store is closed, the store is closed. You can't eat everything you want. So before the store opens, you can think about it 2 or 3 times. Like, yo, is it worth it really going in there and eating another donut and getting fat? Yes or no? Hey, yo, is it really worth adding confluences to this trade right here, even though we're not at the area of interest? Yes or no? So you make a logical decision when the market is closed. When the market is open, you don't. Because if the donut shop is open and you're hungry, you're going in, you're taking the fucking donut, and that's it. The market's open and this shit's moving up and down, and you think it's gonna go down, you're just gonna make up some bullshit. So you always do the analysis when the market is closed, never when it's open, because you make a logical decision when you can't do anything about your execution at that point. So right now we're not at the area of interest, so we can't start applying anything. Chop your fucking neck. Cool. We understood that. We'll move on. The trade of the damn last week, which truthfully I ended up closing like somewhere around here. For a quick 1 to 3. Did I flex this on the stories? Yeah, I did. That's probably why they took my Instagram account down. They said, fuck that. This guy's making too much damn money. Too easy. Take him down. Take him down. It's okay. Because I'll get it back. When you make $300,000 in a week, you can get anything back. Materialistic things, obviously, right? All right, cool. So weekly time frame, we're at a lower low. or no, we're not. We're at this point right here. Daily time frame. We're at a lower low. Boom. Not interested. Thank you for what you did last week, partner. See you soon. GBP JPY. Would you look at fucking that, huh? Pulled back into this area and then sold exactly how we wanted to. It is what it is. Move on to the next one. Let me take all this shit off. All this shit off. Weekly time frame. Oh, we're almost here. Daily time frame. Ooh, not interested. Yeah, fuck it. I'm not interested. AUD USD. Cool. Lower low. Looks like it's having a damn retest about this right here. Line. Oh, dude, this trade looks fantastic. See, look, so you see the difference in between this trade right here and yeah. Okay, so you guys probably might be asking why am I taking all these out? Because I don't like them. They look ugly, right? That's the first thing. Second thing is, so this trade right here, we know exactly what we're waiting for. We know that it's at the lower low and we're waiting for it to create the lower high. So we know it's not as much as of a priority of this right here. This is already having the retest, right? Then you have a trade like AUD USD, which is basically very similar like USD CAD. So if you guys notice here on AUD USD, it's basically Euro JPY like 6 days in the future. So Euro JPY, we have a beautiful lower low, beautiful level of support and resistance that we need for it to then retest for us to then sell. AUD USD already created that lower low and we're already having the retest. You guys are seeing how you guys let that right there, you guys let that 1 wick retest affect you and like that counts it. You don't want that to be the retest. You want it to be the bodies. You want to have structure retest the area like this. You don't want to have that 1 wick retest. You want to have bodies come into this area and then it be able to be confirmed as it being at the area of interest. This is a clean retest of this area of interest. So now we were to bring our trusty confluences over here, which would be a lot better if I just use these. Are we at a daily area of interest? Can we start implementing all of these confluences? Yes or no? Jesus, what is going on? What is going on? All right. So I guess there's some confusion. You need to listen, pay attention. So many chopped necks, man. But I get it. I can see why some rookies could be making a mistake here. And I'm here to fix that. But not until you don't chop your neck. You have to realize you made a mistake and there was a consequence for you making that damn mistake. And now you need to fix the mistake. And I'm going to help you fix it. But the way you're going to acknowledge that you made a mistake is by chopping your neck. So I asked, are we at the area of interest? Are we at the weekly area of interest? Maybe I should ask this question a bit. I'll take partial blame on it, but I shouldn't. Because then I feel like I'm being too lenient. Same fucking shit, yes or no. Whoever said no, chop your neck. Whoever said yes, you got the clear. Yes, we are technically at the area of interest because we have rejected it. So we are at the area of interest or we have rejected the area of interest. So yes, we can now go into the following confluences. So if you said no, chop your neck. And it's funny because I literally laid it up for you guys. I basically said this trade is now ready. And when you compare it to this one, this trade is not ready because we haven't even been to the area of interest with proper structure or rejected it. This right here, as you can see, it is. It's had a proper body structure, and it's the exact same thing where like I literally laid it up. So if you answer that wrong, respectfully, clean your ears. Get one of these things right here. Ear cleaners. Get one of these machines, dude, and like go, go to town in there, bro. And get the electric one. It's like the best one, dude. I have it. Trust me, it helps a lot. So we have rejected the area of interest, so we could indeed start implementing everything else. Cool. Easy. It's not like we haven't done this 100 times and like it's not going to even be easier than the last time. So starting off, have we rejected the area of interest? Yes. Do we have a rejection from the EMA? Well, if I go here, this is where price is, this is where the EMA is. No, we have not had rejection from the EMA. Do we have a candlestick rejection? We do have a little doji right here. We do have an engulfing candlestick right here. Cool. We do have a candlestick rejection. I almost took that out and didn't count it as a confidence. Do we have a rejection from a previous structure point? This is the lower low. This is the lower high. Head of the snake. Turn one. If you want to count this as turn two or turn two, same fucking shit. We have not had the structure retest this area. It's technically not retesting the structure point. A very clean break and retest of the structure is when you are actually touching the structure. This right here is touching the structure. This right here is not touching the structure. So there's no previous structure point. Look at that. See, if you enter the trade as soon as market opens, you're fucked. See, like literally, this is why you don't enter a trade. The market just opened like a fucking second ago. This is why you don't enter a trade as soon as the market opens, ladies and gentlemen, because of this. This is a wick. This is a gap. This is all being created into the market right now. And if you go to your MetaTrader 5 right now, which I'll do right now live with you guys, the fees and the spreads right now are absolutely ferocious. Look, let me see USD CAD. Bro, dude, no, this is ridiculous, bro. No, this is actually ridiculous. Yeah. It's funny because I haven't seen this in a long time, so I don't know how normal this is. So like USD CAD, let me actually add USD. USD CAD has 120 spread. That's crazy. Yeah, you never want to enter the trade as soon as the market opens. Cool, whatever. We're done. We did this. So technically, we do not have a rejection from the previous structure point. Do we have a round psychological level inside of this area of interest? We technically do. 65.5. We have not rejected it though, but we are under it. We could count it, not a big deal. So we do have a round psychological level. Any patterns? Not really. I don't see a head and shoulders. Not a proper break and retest, so we don't have that. Cool. Now that we understand all that, we can then move on to the 4-hour checklist. So let me just add all this right here. So we have the weekly bearish, the daily bearish, and then the 4-hour is bearish. One, rejected, daily area of interest. Two, candle. Cool. This is pretty much all we have from the daily. After we understand what we have from the daily, we're going to go back up to the weekly and we're going to review everything on the weekly. Let me see here. Let me see here. Cool. Weekly time frame. Do we have anything? I mean, yeah, I guess the weekly kind of does have this weekly doji. So we can add here a weekly pattern. So we have a weekly doji rejection. So We probably don't have a weekly area of interest because we've broken above it and we're only looking at the daily. So we are not at a weekly area of interest. Do we have the weekly EMA? No, this is where the EMA is. This is where price is. So we don't have the EMA. We do have the candlestick rejection, which is what we added here. We have a rejection from the previous structure point. No, this is not the previous structure point. This is the previous structure point because if you can see, this is the bottom of the snake. This is the lower high, head, turn one, turn two. This is the previous structure point, and we are definitely not there. So we don't have a rejection from the previous structure point. The round psychological level, we also already counted on the daily. And do we have a pattern? No, I don't see a head and shoulders. I don't see a break and retest. I don't see nothing. So we don't have a pattern. So nothing else that we could really count on the weekly towards our favor. And you see how this is very easy, guys. You just go through it, go through the list. Boom, boom, it's there. It's not. You don't try and overlook shit. I'm trying to do it fast so you guys can realize that you don't have to really overcomplicate shit, right? All right, cool. Let's bring this here. Shit. And if I'm moving fast, catch up. Catch up. Get it? Catch up. No? All right, fine. Whatever. All right, cool. 4-hour checklist. We have to then identify where is the 4 hours. 4-hour bullish, 4 hours bearish. I don't know. What is it? 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 This would be the lower high, lower low, lower high, lower low, lower high, doon, 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 da, and doon. So this is technically where it is. It went bearish because this was the higher low, and then this was the higher high. And then the body candlestick closed under right here, which is basically right here, higher high, and it technically closed under right here, body closed under, making that bearish. Technically, we're still bearish. This candle has 4 hours to see if it decides that it's going to close above, because if this is the new lower low, then this becomes a lower high. This is technically has not closed yet, so as of right now, we are still very much bearish. And even if we go bullish and it does close above that, it does not matter, because we then still have 2 time frames in sync in our favor. So who gives a flying? So now we got to go look for a shift of structure or an entry signal. So obviously things have now changed. This is supposed to be very much bearish. This was supposed to be the lower low. This was supposed to be the lower high here. We basically got our engulfing candlestick. This trade is basically ready to go. We could have entered this trade anywhere in here. Our stop loss would have to be 10 to 15 pips above this point. So this is 40. We would then have to do 50. So this would be our stop loss right here, right above round psychological level, 655,000. And then our take profit, if we are indeed selling at a area of interest, we would have to set at the closest next daily structure point, making this trade not a profitable trade because we don't have a minimum of a 1 to 2 risk to reward, which sucks. So we can do one of two things: either wait for a better entry, so wait for this to come up a little bit, and then basically what it's doing now, and now we do have a risk to reward that makes sense, or we could have a bigger take profit. So we can look left and find the next structure point, which would basically be this point right here. And then this would then in turn give us almost the 1 to 2 that we need. We might have to stretch it a little bit more down here to this area. And then boom, in here we have our minimum of a 1 to 2, 1 to 2.5. So if you do want to remain with the same stop loss and you want to execute the trade, you just have to have a bigger take profit, and you gotta have to have a stomach to hold this whole entire shit. It's basically, remember, you can never fuck with the trade in between. So this trade is having a pullback now. We now have to wait for a proper shift of structure and the engulfing candlestick. The best way to do this is by waiting. So nothing changes. Everything here is still good. Just in the 4-hour checklist, let's see what our confirmations are on the 4-hour, which we could start off by using the first one, which is going to be the EMA. Are we touching or rejecting the EMA? We were. Now it looks like we violated that. So we got to wait for this 4-hour candlestick to close in the next 3 hours and 47 minutes to confirm. Do you have a candlestick rejection? We did right here. Beautiful bearish engulfing rejection, but that just got violated. So we had to wait and watch and confirm. We have a rejection from a previous structure point. We did ish. So we got to wait for this kind of, like we did. Everything was good up to right here. right here, you could bet your fucking house on it. It's a great trade. We probably have like a 75%. Well, you don't bet your house. You don't bet your house on this one because it's not that good. But this one would bet like about a 75% trade. It would be pretty decent. But market opens and boom, the whole entire shit just gets violated. That's fine. And you just react and adapt, and then you just basically start modifying whatever changed. So if this was the previous structure point and this was everything, and now this is where price is, cool. You can't continue analyzing the market like if we're here. It's like, hello, buddy, dude, we're now here. Like there's a completely different opportunity now that we have to react and adapt to. We just gotta wait for this candlestick to close to see how true this is. Because right now, the 4 hour checklist, we're pretty much gotta wait for everything else to go down because with the daily, everything kind of remains the same, weekly as well. 4 hours of things kind of change a little bit because we were ready to go down our checklist on the 4 hour and things just completely changed. So we gotta wait for this candlestick to close in the next 3 hours and then we can start applying all of this right here. If all of this makes sense, say yes. If not, say no. I'm so glad these scenarios are happening live, dude. I fucking love it. It would be so hard to explain that if it's not. I mean, not hard. It would just take time. All right, cool. So 94% of you guys understand this to perfection. We just stop sharing. So I'm gonna keep it going. But I like this one as well. This one's basically good. So if you notice the difference in between this one and the other ones is that this one is at an area of interest. It's basically just waiting for the shift structure to then go. CAD JPY. I don't like it. Who is at my house? Oh, NZD, JPY. I don't like it. GBP, NZD. I don't like it. I'm sure you guys are asking, what do you see there that you don't like? Well, what do you see there that you don't like? Because I don't get it. You're not supposed to get it, man. Because you're just starting to even get how to properly read this shit. Now, how to read this shit, how I do it, it's gonna take you some time. Like there's nothing new that I have to teach you. I don't have to teach you anything else. Like literally, there's nothing that I have to teach you. It's just more of like the way you just know shit goes. Like you just become an OG in the game. So you don't have to learn anything new. So you just haven't done it enough. And you will if you really want to. You got to be ready to show up every day. This is cool. Kind of lower low. Kind of cool. What pattern do you guys see here? Should be motherfucking super obvious. What pattern do you guys see here? I'll make it even easier. What pattern do you guys see here? Correct. Well, chat's not open, don't worry, but if you said it, you're right. Head and shoulders. So I like this one a lot. Basically, right now, we can all agree that we are at a lower low. So if this would be a lower high and lower low, we could then look for our area of interest in here. We go to the left, start scrolling up, boom, we got 1, we got 2, we got 3. Weekly area of interest number 1. And we go down to the daily time frame. What do we got? Same motherfucking shit. This is the lower high right here. This is the lower low right here. We start working our way up. Boom, 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 boom. We got right here 1, 2, 3, 4, 5, 6. And we round it off, round psychological level, daily area of interest as well. So here we have a weekly and daily area of interest. Juicy spot. What a coincidence. Right under it, round psychological level. What a coincidence as well that it's the neckline of the head and shoulders. Done. Now, could we start applying all of the confluences from our trading plan to this trade right now? Yes or no? Where's my gun? Let me get my shotgun. Someone's getting, I'm going to shoot the screen right now. I'm going to shoot this screen. I just hit my knee so hard, dude, with the fucking table. 5% left. You know what? Today I'm feeling a little savage. Dun, dun, dun. All right. So it is a 84-16. So we've gotten better. We've gotten better. Can't even lie. We were at a 50-50 two times in a row. And now we're at a 84-16. Whoever said yes, that this is ready, chop ya fucking neck. I want to hear a fucking like a good one. Hard. Oh, wait. Okay, I bet you did it already. So for the 84 that said that no, this is not ready because it's not. We're not at an area of interest. This is literally the same shit as Euro JPY. This tapped it with the wick, the bodies aren't there. This tapped it with the wick, the bodies aren't there. So it's not at an area of interest. So now we just simply sit back and wait. Next, GBP CAD. Oh man, not again. No, I should have been a rapper, dude. No, should have been a fighter. I was this close yesterday, punching knock to knocking out John Jones, punching him right in the mouth. I'm totally kidding, guys. Do not send this down. Totally kidding. Um, I'm good. I really like this fucking bullshit. I'm good. I definitely don't like this one. Cool. I'm good. Alex, why you got to know? No, it looks good. Okay, cool. Quick explanation. We're at a lower low, right? Lower low. We gotta wait for a lower high. This could be the area of interest. 1, 2, 3. Cool, right? So this is the areas where we're gonna be looking to sell, right? For sure. Cool, 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 cool. Right? And then this would probably be take profit one. Sure, cool. We understand that for price to make it back into that area, what's gonna happen? What's gonna have to happen for the weekly to have the pull back into that area? The daily's gonna then have to go bullish. No time, no two time frames in sync, and that's it. I'm not gonna be. I mean, the time frame's gonna have to go bullish. It's no longer bearish. Then I'm not gonna be interested in it. No point in me distracting myself and waiting time for it to have it, the pullback. So not interested in it. Easy, easy, man. It's very easy. I tell you right now. It's so easy. It's like a game. You play the game, you make money, you win, you leave. Easy. Sometimes you lose. Not good. Not fun at all, I tell you right now. But when you win, it is. I tell you that right now. Bro, I'm just talking shit by myself in a room, man. With people watching me. What if I'm wrong? Well, that could happen. But not a lot. Not all the time. Suppose. This is what I'm talking about. So look, for example, you see right now, this weekly time frame, we are going to pull back into the area of interest. Let's say we pull back to this area of interest. When we pull back on the daily will still very much be bearish. The area of interest is not above this area. So if it pulls back here, we could still be interested in selling along with the 4 hour. We can still pull back into this area and we could be interested in selling and then we'll still be bearish. These are the type of trades you want to be taking, my friend. We need to pay attention. I like that one. I don't like this one. And this is new coin. I look to put money maybe one day. Okay. How many pairs we have these fucking okay. That's your USD. All right, cool. So we only have 1, 2, 3, 4, 5. Let me organize them by the ones that are in the most potential active, the ones that are ready to go. This takes me about 30 fucking seconds. Done. USD CAD is number 1. We're now going to be waiting for the next shift to structure on this to be able to take this trade to the upside because technically right now, if this candlestick were to close like this in the next 34 minutes, we are then bearish again. This was the higher low. We're now bearish, so then we got to wait for this to body close above this lower high right here and then basically do the same shit all over again. Shift the structure, engulfing, and then we take the same trade. Same thing applies to AUD USD. If we close like this, we're now bullish again, and then we gotta wait for the shift of structure on it again. And then there we're gonna have to be interested in the trade heading to the downside. Cool. After we got that right there, then we're gonna be needing for this right here. We're gonna be waiting for this trade to make it to the area of interest, so then we can have the shift of structure to then sell to the downside. Euro JPY, we're going to need for this trade to have the shift to pull back into here. So we have to shift the structure to then the downside. And then we have Euro AUD, which we want to have the pullback for then shift the structure to the downside. Here we are still technically at a 1 because we're at the lower low. And after the 1, this one is technically a 2 because you see some momentum back into this area. This is a definite 2, definite, making my new words nowadays. Definitely a number 2 because we're on our way to the area of interest. Here we are at the area of interest. We are a 3. And here we are at the area of interest. We are a 3. Ladies and gentlemen, that is how you do Sunday motherfucking swings. Put a W in the chat. Actually, before that, I'm sorry, guys. I'm sorry. I mean, if all that makes sense, say yes. If not, say no. I dare you. I dare you to do it now. Don't fucking do it. Okay. That's basic. So, like, you guys see how if I would have done this Sunday swings 2 weeks ago when I canceled it, how you would have been lost? It, you're welcome. You're welcome because you would have been so lost you would have not even known. You would have probably left the boot camp. Yo, I don't want to be here anymore. So you gotta trust. You gotta trust the process, man. So 95% understand. Lit. Cool. I mean, I know you guys might have some questions, and all of these questions I'm probably gonna have to answer tomorrow. Alex. Alex, what if we have 5 out of 5 already the same day? So that's rarely ever gonna happen, partner. And if it does happen, You just pick whichever one makes the most sense, and then you execute it. You can remember you could only fit one person in the Bugatti, bro. You can't fit five. That it would turn into a problem. Trust. You guys haven't seen my girl, dude? Bro, look at my girl, man. Like, come on, bro. You guys haven't seen my girl? Look at this. I'm a little hurt that you guys haven't seen my girl. See, like, I barely fit two girls in the Bugatti because my other girl would not fit. Bro, I sometimes eat too much shit, man. Look at this. Um, can you guys see the chat? Can you guys see the YouTube video? Yes. All right, look, let me show you guys my girl. You guys gotta go see this video, but this video is hilarious. I, it's like I can't even like, I can't even go. Like, you guys have to go look at it. It's like right around here. It's like around the 3 minute mark. You guys just go watch it, bro. Yeah, you guys just go watch it. I can't even put it, bro. Mermaid, if you ain't cheating, you ain't trying. Quote of the day, ladies and gentlemen. Quote of the day. Quote of the day. Quote of the day. John Jones is gonna chop your neck. That's all I gotta say. John Jones is gonna chop your neck. Ladies and gentlemen, go watch the recording. See you guys tomorrow at 7 a.m. EST. We're about to start turning shit up officially in the last week of the first part of the 30-day boot camp. It's crazy how time has flown. Can't even believe it. We have people out here like Jeremy and Joseph that you guys are spamming. I'm probably gonna kick you guys out for the next class, guys. Respectfully, you guys spam the chat too much, bro. I am gonna definitely kick you guys out for the next class. So please stop spamming the chat. And yeah, I'm very, very excited for these next upcoming week. We're officially in the last turn on week number 4. Um, all I can say is this week, if you haven't had your full aha moment, you're definitely going to have it towards this last week. So thank you very much, guys, for being here today. And make sure that you guys are there tomorrow, 7 a.m. EST. Watch this Sunday swim recordings and set and forget. See you guys later.